Good morning. We're at the tail end of January here on the 31st, and we're going to talk about some potentially actionable exposures that we can look at on Longbow. There's lots of macro data out this week, and in China in particular, PMIs came out showing that the economy is moving from inflation to reflation, which previously the rate of change of growth in GDP was decelerating. Now it's accelerating along with the rate of change in growth of inflation. China PMIs were at 7-month highs. You had the manufacturing PMI up by 3.1 points to 50.1. Non-manufacturing PMI increased by 12.8 points to 54.4. And then the composite increased by 10.3 points to 52.9. And I've talked about this before, but Goldman did a great study showing how returns improve when you're at levels above 52 and if they're increasing. So obviously this puts another layer of confidence on the recent China asset rally. Plus, investors should expect monetary stimulus and fiscal easing to help fuel additional growth here in the first half of 23 and into the second half of 23, which we don't think is fully baked in yet. And securities have recently declined. There's been a bit of a softness after the big run. So I'm going to bring you over to the Longbow dashboard for some ways you can think about playing this trend. So I've put 3 securities on here: FXI, which is an ETF for China. I've got the UUP, which is the dollar, and then basically the commodity ticker for oil or for crude. So how do you put that all together is obviously this one's a little bit easier, the FXI. I'm going to take it off KISS view in a second, but you've got a bullish short-term momentum signal, medium-term bullish as well. So that's obviously pretty good. And earlier this morning, this was below the green line. So you actually had this on a oversold signal here. It's just shy of that green line now to the right. And so you have odds of 5-to-1 on that security. Then you have the dollar, right? And this actually was overbought this morning as well. It's come down a little bit in terms of the trading ranges, but it's very close to the high end. And so obviously the dollar has been softening since the fall of 2022. And we would expect that to happen as China's prominence grows and the US has a slower growth rate. We talked a little bit about that relative to the dollar this week, so you can kind of put all those things together in your mind to put the patterns. So if you were looking to short the dollar, you could short the UUP when you get here at the top end of the range, and that's something to look at. We'll look at the visuals in a second. And the other one is energy. So obviously when a country such as China is growing, it's coming out of zero COVID, you would expect energy to be accelerating in terms of its price. And yet we're at an oversold signal. So if you don't have as much energy in your portfolio and you're looking to add, that obviously is a signal you'd be looking at. And then you could put your individual tickers in that you're most interested in. So if we take it off the KISS view and we're just going to look at the FXI, let's take a look at that today. What you can see, obviously, total momentum signal, and it's at an implied volatility discount. So that's not as great because you're hoping it'd be at a premium. You hope people are worried. They're not quite worried. There's big short interest on this, though. People have been using this to short other securities. So basically, short against and hedge against other securities they might own. So that is a positive. But what you can see here, it's near the low end of the range. It was below it earlier this morning. And so that's one to look at if you don't have in your portfolio, you were looking to add as a signal for either individual securities that you can add related to China or ETFs that might be of interest. And we've talked about some before, KWEB, FXI, and others. So that's the China ETF. And then we've got the dollar ETF, obviously in a depreciating mode here on both the short-term and the medium-term momentum signal. We're looking at implied volatility premium, so people are concerned. Again, when you're looking at something opposite, like you're looking to short something, you would hope that they're not too worried about it, but that's what you see here. So that's the opposite you'd be hoping for. There's a bit of a short interest in this one, not too much, but this would be one that if you're looking to take a bet on the dollar, we talked about EM, we talked about gold in the past few weeks, but you could also just short something like the UUP. And then we've got taking a look at crude. Obviously, it's come down. It's come back up a little bit on the hopes of the China reopening. We're at a neutral signal short term and a bearish medium term. But this is one, we've talked about this a little bit, that when with China reopening, They need energy. They need raw materials. They will purchase travel and other type of services from around the world and raw inputs from there. Also, there's the European companies that sell into China that also should be doing a rebound. And obviously the Eurozone's had a big rebound since the fall. So there's lots of different ways you can play this, but I just wanted to show you 3 of them this morning that were very, very close or over the tops and low ends of the ranges, and how you might be looking to play the strong numbers that came out of China this week from a macro perspective. That's it for today. I'll see you, I guess, in February tomorrow, and we'll be back at it.